Palantir stock. Palantir's the main subject of today's video. The move's been parabolic in Palantir, right? A lot of people are looking at this. Bears are in complete disgust with the move Palantir has made here. Now we are talking about it just crossed a 200% gain this year. Absolutely incredible, right? A lot of us bulls have been making a whole lot of money. Palantir just crossed a six-figure position now in the public count, and it just shows no signs of slowing down right now, right? And so everybody's trying to figure out, bears are in complete disbelief. Even bulls are looking at this and like, this can't be sustainable, can it? Right? And so I want to share some perspective, some very important perspective. If you know me, I've been part of a lot of extremely successful companies over time that went on ridiculous runs. Elf Beauty and Tesla are two that come to mind that obviously well over 10x, right? On our Elf shares, I'm up about 1,400 or 1,500% right now. I have Tesla shares I hold that are over 2,000% gain. And those are just some stocks over the past few years that are obviously, extraordinary moves. Obviously, Palantir is not even remotely close. I just hit 100% plus gain in Palantir, right? And so I think I've got to get some very important perspective out there so everybody just kind of understands this on a little deeper level on what's likely to happen with Palantir kind of moving forward, and just kind of talk to folks a little bit about Palantir. Now, before we get into that, I want to react to this video because I thought this was an important one to react to. There's a lot of points this lady makes in this video that I need to give some counterpoints to. It's extremely important because she brought up a few fair points, but I thought some of these points I'm just like, oh, this is so bad. And so I just want to react to that. By the way, thanks to everybody that subscribed to the channel. I appreciate y'all being here. We are now at a new all-time high subscriber number in the history of the channel. It goes up so fast. Like sometimes earlier the video I put out, I said 34,500 plus subscribers. We were actually at 31,800 plus subscribers. So yeah, I appreciate y'all being here. Thanks so much as always.
An asset management global market strategist. Mira, good to see you.
Good to see you.
It seems clear we've gone from, relief rally because inflation's lower and the Fed might be done, to something closer to really a fuller belief that, in fact, we might have an expansion in the economy indefinitely and earnings look like they've seen the worst of it. How does it make you feel? Do you want to bet against that happy scenario or believe that it can continue like that?
Markets seem to be pricing in immaculate disinflation, but the reality is that might be transitory because we are seeing that disinflation is occurring while growth is actually accelerating. But the reality is they often move in similar directions. And I do think that as you see more gas come out of inflation, you're going to start to see that over time happen to growth as well as things like the consumer soften. So when I think about markets, there's a little...
Okay, right off the bat, she says the consumer softens, okay? So there's certainly a potential the consumer softens. There's also a potential that the consumer is actually going to get far stronger over this next 6 to 12 months that I don't think a lot of people are even taking into account. Consumer sentiment, the Michigan consumer sentiment that has been done since like the 1950s, hit the lowest level in its history last year. Right around this time, actually. I believe it was either May or June of last year, right? Since that time, consumer sentiment has been improving. We are still on low levels compared to like other good time periods where consumers are feeling real good about themselves. And the reason things have turned is we had basically real wages going down for like over 2 years straight. Finally, over the past couple quarters, real wages are starting to go up again, okay? So there is a potential, keyword is potential, that the consumer could actually strengthen and be in a lot better spot 6 months from now than they were a year ago, okay? That's something that needs to be taken into account. Everybody's always just assuming like the consumer just gets worse and worse and worse. There is also a potential that the consumer could actually get in a better spot. The consumer was screwed for like over 2 years.
Bit of a ceiling here in terms of how far I think markets have left to go. Because when you look at valuations, for example, valuations are a bit stretched. Even when you strip out the top 10 stocks, still about 15% expensive. When I think about what's driving markets this year, it's very much multiple expansion. You actually only see earnings being a big driver of performance in areas like Europe and Japan. So if I think about this as glass half full, I don't think we're going to retest the lows from last year. But if I think about this as glass half empty, I also don't think we're going to retest the highs from last year anytime soon.
The highs from last year in the S&P anyway, just a couple of 100 points really from here. So in striking distance perhaps, but maybe the scenario, the backdrop has changed enough that it might make it challenging. Although, what do you say to folks who say, look, multiple expansion is exactly what happens early in every bull market. I mean, that's how you get into a bull market. The market leads earnings. And we have, even if it's rare, seen soft landings before.
It's rare, and we have seen them before, but I also think
the point he just made should not be just, forgotten about, because that point is beautiful. Okay, absolutely beautiful point. Every single time you see multiple expansion at the beginning of a new bull market, that's what you go into, whether this is a year-long bull market or a several-year-long bull market, right? That can all be up for debate. But you look at past every single new bull market, it was all multiple expansion for the first 6 months of that. It wasn't earnings expansion. It was multiple expansion. Look back to the great financial crisis, and what will you find? For that first 6 to 9 months coming out of that, it was not earnings expansion. It was multiple expansion. Company earnings didn't really start to improve till the very end of 2009 and into 2010. Company earnings had finally bottomed out and started improving, right? Meanwhile, the market bottomed in March of 2009, right? Look back at 2020. What did you see? Market bottoms March of 2020, right? Earnings were horrible for at least the next quarter or two. So what did you see as the market was going up? Multiple expansion, and then the earnings started to come in toward the back half of 2020, and obviously in the beginning of 2020, and people are like, oh my gosh, these growth rates are shocking. Like, who would have known all the stimulus money would be spent out there, right? And that went on. And you can go back to all the previous ones, the same exact thing happened. So, I just think that's important to understand. It's not like you have to wait for earnings. The market's ahead of this stuff. And the market, especially in today's day and age, is more ahead than any time we've seen really throughout history for many various reasons.
Look at the earnings picture versus the valuations. Sometimes you also see towards the later end of the cycle, people get a little bit exuberant about valuations and multiples when the earnings growth is just not there. So I think we want to be a little bit careful of that. Now, look, earnings have not been that bad. They've actually been better than feared for about 6 quarters now, including this one. But I don't know if that's enough to break us out to the next level and to have a durable expansion quite yet. Until we start to see more earnings upward revisions and we start to see that the worst is truly behind us, I don't think we're there. And so what could be ahead of us that looks a little bit more dour when we come to earnings? Because margins have stabilized, but we're seeing actually the beats on a revenue basis have been pretty low historically.
Yeah.
And so that.
But also keep in mind, this is seen as a trough earnings. Q1 and Q2 were seen as a trough earnings, things improving Q3 and improving Q4. What have we heard from companies so far? Guess what? Things are going to improve in Q3. Things are going to improve in Q4. Meta's guidance was pretty darn shocking, just to be quite frank. Pretty darn shocking. In terms of what they're projecting for their revenue numbers, crazy, okay? If Meta's projecting that, that means other companies in general are projecting a much stronger business environment, because you're not just going to spend on Meta to spend on Meta advertising dollars. It's because you see reasons to spend all that extra money, right? Because your business is there now. And so you got to keep this in mind, right? NVIDIA, when they come out and report the type of numbers they reported and, what should be shaping up in the back half of this year, their sort of numbers. They're not just putting out those numbers to put out those numbers. They're putting those numbers out because they believe things are going to strengthen substantially in the back half of this year.
Concerned because the other side of inflation is it's great for margins, because we see that as inflation comes down, wages and input costs start to stabilize. But on a revenue side, if you're buying that same cup of coffee every day and it's getting more expensive over time, that benefit accrues to the company if they pass that cost on. But the reverse happens when you start to see inflation come down. So I think we want to keep a close tab on revenues to really understand whether we're out of the woods on a profits perspective.
Yeah, there's no doubt true, although it is funny in a sense that we're now going to start to worry about disinflation happening too quickly, whereas last year was all about inflation is out of control. And I agree, earnings estimates have actually kind of rolled back over in terms of the revision ratio. So there's no easy way out of a lot of this stuff, I suppose. But what would you say you would do practically and tactically right now? You do look across the world, you look across asset classes. So what seems a better relative bet?
In the U.S., if earnings are important right now, take a look at sectors, because a lot of the negative earnings revisions that we're seeing are coming from areas like energy and materials, whereas actually we're seeing some pretty good outcomes in certain areas of industrials, of consumer discretionary, consumer communication services. So look underneath the surface to experience and understand really which areas have already gone through the toughest times and are starting to come out of it versus which ones have a few tough quarters ahead. So that's how I'd think about the U.S., but valuations are important. And if valuations are important across the board, we're still looking in areas internationally because you see valuations at over a 30% discount relative to the U.S. Now, I do think the easy money has been made internationally when we think about Europe avoiding a recession for now, coming out of the energy crisis, China reopening. But again, when you think about the areas where earnings are actually positive from a revisions perspective, look at Japan, look at Europe, look at Latin America on a tactical basis, one of the best performing markets year to date. I think there's some cyclical and structural things to like in areas like Mexico. And then outside of that, the very cheapest area when we look at yields is the bond market. The higher quality bond market still looks pretty favorable, and that's an easy area to deploy money, not even because you think the economy is going to go into recession, but even a little bit of a slowdown in growth and inflation should help yields come down, bond prices start to reset.
Now, in terms of what stocks are going to potentially outperform quite significantly for the remainder of this year, I went very in-depth into that in today's video on the main channel. So if you guys don't watch my main channel, it's called Financial Education. And it's obviously a very different channel than this, where this is more me reacting to videos and articles and things like that. That channel is more of me like putting together like a thesis and like a whole video on why I think certain stocks are going to do certain well and things like that. And so today in that video, I made like a 35-minute video that went really into depth on many different subjects, including stocks I believe are going to outperform quite significantly and what sectors could outperform quite significantly for the next 5 months. So definitely check out that video, Financial Education. Okay. So now in terms of Palantir, right? A lot of people looking at this are like, this move must be unsustainable. We're making too much money. Like, it's going to have to go down and all these sorts of things, okay? I want to give a little perspective out there, all right? Here's a little stock that I've owned over the years called good old Tesla Myasla, right? In a matter of months, Tesla climbed 320%. This was coming off of a pretty painful period in 2019 and running through a little shortly before Rona. The stock ran 320% in a matter of months, okay? Now, Tesla's done this many, many times in its past. This was coming out of Rona. For the remainder, several months coming out of Rona, the stock climbed another 300+%, right? And so you could look back at Tesla several different times in its history, and in a matter of months, it climbed 200%, 300%, 400%, right? You look at a stock like Shopify's done that several times in its history. A stock like Amazon has done it several times in its history. Even look at a stock like NVIDIA. NVIDIA has had some incredible time periods throughout its life cycle, right? Obviously, this year, NVIDIA has been extraordinary, right? The year to date on NVIDIA, 226% gain for NVIDIA. But this stock has made some absolutely tremendous runs throughout its history where it's climbed 100%, 200% in very, very short amounts of time. And the thing to understand is stocks can go on some absolutely incredible runs that you never really even saw those sorts of runs coming. And if the business fundamentals start to line up the way it's funny, you look back at all these different time periods throughout NVIDIA, and yet NVIDIA has been one of the best stocks to be in literally in the past 10 years in the stock market. Absolutely incredible. Like the ups and downs the stock has gone on, all for just absolutely incredible gains over time. But you got to understand, like, great companies that all of a sudden are going through some sort of inflection point in their business models where it goes from everything's bad to things are looking really, really good. They go through insane runs, man. I mean, absolutely insane. And a lot of times it doesn't make sense. Why does a stock go up 200%, 300%, 400%, whatever, right? But the thing you got to understand is when things go from bad to not so bad to, oh, this is really good, you see an absolutely epic move in a stock price, right? And, obviously, just if we pull up, like if I was to just take NVIDIA out, it's incredible kind of looking at it very short term over a period of months over the years, right? But I mean, just look at NVIDIA. Over the past, decade or so. This is about over the last decade. The stock has gone up 14,000+%. 14,000+%, right? Throughout all that roller coaster ride of ups and downs, and at the end of the day, great companies, if Palantir is really what we think it is, right? It's going to go through some extraordinary ups and some extraordinary downs as well. But to think like, oh, it can't make this run, or I can't do this, or this is unsustainable is usually just kind of like a bad way of looking at the whole game, okay? I mean, could Palantir go to 30 after earnings? If they came through with the numbers, sure it could. The big question is, are they going to come in with the numbers, the sort of guidance that can get you to $30, right? That's what they need to do. If they do that, there's no stopping a stock. And that's a big problem the shorts run into many times, is they think like, oh, the stock's got to stop running. Not if they come through with the numbers. If the story goes from everybody didn't care about the stock, which was what Palantir was going into this year, to all of a sudden it's like, oh, they might have some exciting stuff going on. Oh, and then all of a sudden they prove out all that. The moves are just astronomical when you can go from no one cares about the stock, everybody and their grandma was selling the stock and it was nothing but selling pressure, to all of a sudden no one wants to sell the stock and there's like everybody chomping at the bit to try to buy this dang stock, right? I mean, the moves are parabolic. And then you'll eventually have a breather period. But sometimes you have to wait for a breather period for 9 months, a year, year and a half before you finally get a nice breather in that stock and finally come in with the numbers, or some analyst downgrades it and the stock takes a breather for a minute, okay? So I just want everybody to understand that point. Just because the stock's gone up a lot does not mean it's going to crash anytime soon. That's just, need to put that out there. It's always a possibility if they don't come through with the numbers, but they come through with some epic guidance, whew, the baby can keep flying. Appreciate everybody joining me as always. Thanks so much for being subscribed, folks. And also, check out pinned comment down there. Put together a free workshop for you guys, how I find 10x stocks. Should be very valuable. It's about a 28, 29-minute video. So definitely get access to that if you want. Pinned comment down there, free to access. And also check out my main channel if you didn't get to see today's video, because that'll go into the next stocks and sectors that I see really performing well over time. Appreciate y'all. Much love and have a great day.